सभी माननीय सांसदों से आग्रह करूंगा कि आप इस अवसर को जाने मत दीजिए। पूर्ण बजट नई सरकार बनने के बाद आपके समक्ष लेकर के आएंगे। इस बार एक दिशा निर्देशक बातें लेकर के देश की वित्त मंत्री निर्मला जी हम सबके सामने कल अपना बजट पेश करने वाली है।
In about 3 hours from now, Finance Minister Nirmala Sitharaman will present the interim budget, the last budget before 2024 polls. As global growth slows and interest rates rise, all eyes will be on how the Finance Minister treads the tightrope between fiscal prudence and populist policies.
India Inc.'s balance sheet is showing optimism, but a growth booster is lacking. With elections around the corner, is some relief on the cards for the middle class on the taxation front? And as the government tries to remain on the path of fiscal prudence, the big question is, can the finance minister provide a thrust to growth without upsetting the fiscal balance?
A lot more taking place in the US markets as well. Stocks crack on Wall Street as Fed Chair Jerome Powell quashes hopes of a rate cut in March. Although he did hint at cuts at some point in the year, the Nasdaq is the worst performing index overnight, losing over 2%. The Dow Jones and the S&P both slip about 1% each.
Asian markets also open lower on weak handover from Wall Street as the Fed plays down chances of rate cuts in March. The GIFT Nifty, however, is indicating a flattish start for the Indian markets.
The RBI imposes major restrictions on Paytm Payments Bank for persistent non-compliances and continued material supervisory concerns. Stops fresh deposits and credit transactions from the 29th of February. Also tells the bank to clear all pipeline transactions by the 15th of March. Paytm says they expect a 300 to 500 crore rupee impact on their EBITDA from the RBI's restrictions. Finance Minister Nirmala Sitharaman will present the interim budget in what's an uncertain time for the global economy. Interest rates and geopolitical tensions are rising, while economic growth worldwide is slowing down. Domestically, it is also the last budget before the 2024 polls, so the market will be watching out for the balance between both fiscal prudence and populist policies. And even as India Inc.'s balance sheet looks good, the absence of growth drivers or growth booster is still being felt. The big question is, can the finance minister provide a thrust to growth without upsetting the fiscal balance? This is CNBC TV 18's Budget Headquarters. I'm Manglam Malu. With me, Nigel D'Souza. Nigel, good morning.
Well, morning, Manglam, and morning to all our viewers. No bigger day than this, right?
It's B-Day. That's what we call it.
That's true. Well, let's get straight to our colleague Parikshit Luthra, who's joining us now. Parikshit, what do we expect from the budget this time around?
Poor women, youth and farmers. These are likely to be the four main categories that would be prioritized in the interim budget by the finance minister. Poverty alleviation has been a priority for the government, and so we could see measures to bring more people out of poverty. Farmers, a big priority area for the government. In 2019, we had seen the PM Kisan Samman Nidhi program. The allocation under the scheme per farmer could increase this time from 6,000 to 12,000 rupees. So that's almost a 50% jump. When it comes to women, this is an important area for the government. Over the last few weeks, we have seen a number of policy interventions to increase the participation of women in the workforce. So different permutations are being considered. One, it's possible that women farmers may be brought under the PM Kisan Samman Nidhi. There could be a specific category for them, or there could be schemes to promote employment for women and women entrepreneurs. MSMEs, again, a big focus area for the government, and there is a consideration that the interest subvention scheme can be increased for MSMEs to benefit them. Middle class was a big focus last year, and it remains a focus for the government. You cannot rule out tax ops. Let's see what the finance minister does. When it comes to capex, we are only likely to see a modest increase in capex this time, as this is a vote on account. But, of course, the big ticket schemes of the government, some big bang reforms, they will have to wait till after the general elections when the full budget is presented.
All right, thanks a lot for that, Parikshit. The full budget in July, but the Prime Minister did call it a Disha Nirdeshiya budget, or a budget that lays out the direction for the full budget as well. So let's hear out what the Prime Minister had to say ahead of the budget session.
सभी माननीय सांसदों से आग्रह करूंगा कि आप इस अवसर को जाने मत दीजिए, उत्तम से उत्तम परफॉर्म कीजिए, देश हित में उत्तम से उत्तम अपने विचारों का लाभ सदन को दें और देश को भी उत्साह और उमंग से भर दें। मुझे विश्वास है, आप तो जानते ही हैं कि जब चुनाव का समय निकट होता है तब आम तौर पर पूर्ण बजट नहीं रखा जाता है। हम भी उसी परंपरा का निर्वाह करते हुए पूर्ण बजट नई सरकार बनने के बाद आपके समक्ष लेकर के आएंगे। इस बार एक दिशा निर्देशक बातें लेकर के देश की वित्त मंत्री निर्मला जी हम सब के सामने कल अपना बजट पेश करने वाली है।
Well, moving on to the big global cues then, stocks on Wall Street fell on Wednesday after the Federal Reserve Chairman Jerome Powell said that the central bank will likely not be ready to cut rates in March. The Dow was down close to 300 points, the S&P 500 fell 1.5%, and the tech-heavy Nasdaq lost close to around 2%. The bond yields as well trimmed down their losses after the decision. The 10-year Treasury yield fell below that 4% mark. Yesterday, the Federal Reserve signaled that they are done rising interest rates, and it is very unlikely that there will be a cut in March. CNBC's Steve Leeson joins us with all of those details.
Very dramatic moves around stocks, around bonds, around Fed fund futures. I'll just show you one example of how things have been moving. You've been following the stock market. Look at the outlook, the probability for a March rate cut. It's come down 36%. We had been, I don't know, between the meetings as high as 80%. So hopes dashed around the world for that early Fed rate cut. But I have to tell you, I was somewhat amused because I didn't think Powell was going to answer that question as detailed or as specifically as he did, because the story is this. I thought like he said, he didn't say this, but I thought he could have said, if you haven't listened to everything we've said between the meetings, if you didn't listen to what we said in the statement, and if you didn't listen to what else has been going on, we're not cutting in March. Let's hear the sound from what Powell said, dashing hopes for that March rate cut.
Based on the meeting today, I would tell you that I don't think it's likely that the committee will reach a level of confidence by the time of the March meeting to identify March as the time to do that. But that's to be seen. So I wouldn't call, when you ask me about in the near term, right, I'm hearing that as March. I would say I don't think it's probably not the most likely case or what we would call the base case.
Yeah, and I'll just leave it there, except for, I'm sorry, but that is consistent with things that the Fed chair has been saying, and the market has been listening to some extent, but not nearly as much as perhaps it should have been.
So that's the action from the Wall Street overnight. Let's also listen into some important opinion coming in from market experts on what the Fed did overnight and their decision to hold rates steady. When are the cuts likely?
Jay said, this is about data and how comfortable they are with inflation and how the employment picture evolves. We're as data dependent as I can remember at any time in the Federal Reserve's policy reaction function. And I think they want to go. They want to declare victory. I think they, in spirit, have already done it by telling you this is what they want to do. But they're going to be cautious and careful. And I think they're right to be cautious and careful. And I think the market's probably going to reward them in the end for maintaining that credibility and not kind of giving in too early to those that are whining about, well, we need to have our rate cuts because maybe something's going to go wrong. If something goes wrong, they can cut, and they can cut pretty fast.
It sounds to me like June, September, December is what they're thinking, 3 rate cuts this year, provided the economy keeps growing. And this is good. And the other thing is they put in a phrase about the balance of risks, and I really think that's what they're looking at here. There doesn't seem to be at the moment a sign that the U.S. economy is going to keel over and fall into recession anytime soon. And until they see greater damage or potential damage to the economy, given the huge run-up in markets we've seen, they just see the balance of risk more being on the side of inflation being sticky than the economy falling into recession. And that's why I think they're being hesitant to have near-term rate cuts.
Well, so the commentary that came in overnight was read as hawkish. And because of that, you have the Asian markets that have opened up a little bit tepid today. So most of the markets trading in the red. You have the Nikkei as well. That's pulled back a little bit. The Hang Seng, though, that's doing a relative outperformance. Keep in mind, for the month of January, that was a relative underperformer, while the Taiwanese index as well is down close to under 0.1%. So the problem is that the rate cut may not be a surety in the March meeting, but the street is pricing in almost 100% probability that that rate cut will come about in May itself. The implied opening for us is more or less flattish as well. Yesterday was a very, very good trading session. Let's see how it goes today. For the time being, though, we'll slip into a short break. On the other side, we'll get you an entire trade setup for the day, the stocks in focus, and more on the other side. Don't go anywhere.
Morning, you're watching us here on Budget Breakfast. We told you what is the expectation from the budget, what the global setup is, but how should our markets react and what is the setup for our own markets? Both Nigel and I will tell you that. Nigel, start with, yesterday was a good day. What did the FIs do in F&O?
Well, in the F&O segment, if you look at the index futures, they went ahead and they added long positions big time. So close to 18,000 long contracts for every 5,000 short contracts. So the ratio basically was 3 longs added for every 1 short. And now, in fact, the long positioning has gone up to around 30%. Remember, just a few sessions ago, it was down to around 20% approximately. So that proportion has moved up. And the shorts, well, they have relatively come down from that 82% to around that 70% odd mark. Keep in mind, they're very much still net short on the index. But at the start of the series, the net short positions were close to around 1.08 lakh contracts on the short side. That's come down to the mid-80s, 87,000 contracts out. So some bit of that net short positioning has played out. But though they continue to remain heavily on the net short side. But Mangalam, otherwise, how are they positioned? On budget day, how are the FIs positioned in the derivatives market, and what's the normal reaction we see on a budget day?
Well, you said that, they're net short this time around. That has been actually the case for all the budget sessions that I've seen, at least in the last 4 or 5 years itself. You start from Feb 2020. The FIs went into the budget with long exposure of just around 15%. What did the market do? That day, of course, we had the coronavirus scare, etc. So we saw a 2.5% decline on the frontline index. It was only the next year, which was Feb 2021, after the big rally that we saw, the FIIs were long, 63% long exposure. The Nifty moved around 5%. That was one of the best budget moves that we've seen in the recent past itself. Feb 2022, FIIs again, just net long with 32%. Feb 2023, which was the last budget, FIIs went into the budget with just 18% long exposure. The Nifty did fall from the highs, ended about a third of a percent lower. But today, after a big move that we saw yesterday and uncertain global cues and the fact that it's an interim budget, the FIIs are still net long by 30%, which means net short of 30%, 70%. Let's see where the Nifty goes.
Well, Mangalam, in an uptrending market, you want to see put writing.
Yes.
And yesterday, that's precisely what took place. So the 21,500 put, there was a fair bit of open interest in yesterday's trading session. In fact, that was the most active strike in trade yesterday. And the premium was roughly around 50 rupees. So there was aggressive writing being seen out there. On the upside, 21,900, well, that's being written for the last few days. And the massive open interest build up over there as well, close to around 25 lakh shares. Because of this kind of a change, you saw the PCR that moved up from around that 0.8 odd. Intraday yesterday, it went to around 0.75. It ended the day at close to around 0.9 odd. In terms of a reference point, when it goes to around 0.65 to 0.7, that's when we normally see a bit of a bounce out there. Let's get you the levels then. Since the 21,500 put was seeing aggressive amount of writing yesterday, the support zone is in this vicinity of around 21,400 to around 21,450. If that breaks, the reference point is the recent low that we saw, 21,140 or thereabouts. But on the upside, the 61.8% retracement of that entire correction from 22,200 to around 21,100 odd, that comes in that vicinity of around 21,800. And going by the options data as well, that's a bit of a resistance zone. We visited that mark actually a couple of sessions ago, and from there we saw a correction. But Mangalam, the last two sessions, the Nifty Bank is the one that's outperforming. And that's done very, very well. And that was the call that we made yesterday as well. But in the near term, if you need to see a bit of a pullback, then the 100 DMA becomes a bit of a reference point on the downside. And at that breaks, you don't want that 200 DMA to go at all, because intraday it has broken that. But from there, it's seen a bit of a bounce. And the Nifty Bank, the good news is, last couple of days, it's been in good form. But mind you, for the month of January, it was a big, big underperformer led by big boy HDFC Bank.
Led by big boy HDFC Bank, and it's also weekly options expiry today along with budget, so that will play out. And it was the HDFC Bank sell-off that we saw, which reflected in the cash market selling as well. The FIs in the month of January itself have sold nearly 36,000 crores. The DIs have bought, they've done their best to buy about 27,000 crores, but that deficit still remains. And most of that was in big boy HDFC Bank, and that reflected in the way we've seen, the moves of the Nifty as well as the Nifty Bank. The Nifty is just about 2% away from a record high, ably buoyed by both the IT stocks as well as Reliance, but the Nifty Bank has been an underperformer there. It is down about 5.5% from a record high. The recent outperformance that we saw, let's see whether that sustains or not, because if that does, then maybe the record high on the Nifty is not too far away.
Well, that's right, Mangala. Actually, we had three big triggers for today, right? One was coming in overnight from the FOMC. The next one would be the budget, and then would be the expiry. One has played out, and actually it's played out in favor of the bears, because Jerome Powell, well, he sounded more hawkish than dovish. And that was a bit of a disappointment. So post that commentary that came in, that maybe in March meeting itself, we may not get a rate cut. You had the US markets that were under pressure. Risk assets, they sold out. Whether it was the Bitcoin or other assets as well, did see some selling. You saw some cooling off in the US 10-year yield, which came down to around 3.9%. The last time I checked, it was 3.95% odd. And the US dollar strengthened, obviously. The probability now of a rate cut in the month of March, it's reduced from nearly around 90%. It's come down to close to around 38%, thereabouts. So basically, the probability has reduced by half. But the street is very much anticipating that in the month of May or the meeting of May, he'll not disappoint, because 95% are still projecting. I was looking at the Fed futures, and they are saying that, yes, the probability is still 95%. So maybe this rate cut that was expected is a little bit delayed.
Or as they say, may the rate cut happen in May itself. But Nigel, we aren't done with Qs yet, because not only is it the budget and expiry, we have the first of the month auto sales come by as well. Yes. That will be a forward-looking data point. Also, the RBI policy on Feb 8th, remainder of the third quarter results, FII flows and regulations around that. There is still some uncertainty around, how the flows are likely to pan out. Also, most importantly, we'll watch out for the movements in HDFC Bank. That would be a big swing factor for the Nifty Bank, and as a result of which the Nifty. And then political developments. We are just a couple of months away from the election, so campaigning for the 2024 India general election begins, and US elections as well. We have, we'll keep an eye out on how that plays out.
All right. Well, so that's the entire trade setup, but let's focus on an important stock to track today. That's going to be Paytm. The Reserve Bank has directed Paytm Payments Bank to stop onboarding of new customers with immediate effect. Ritu's been on top of that. She's here to explain what does it mean, its impact, as well as what a brokerage is making. Ritu, first of all, good to see you in Mumbai, and tell us about this piece of news.
Well, good to be here in Mumbai. But, first to make a differentiation between the payments bank and Paytm as you and I use it on the application. That is unaffected. Yes. It is the restrictions that have come in on the Paytm payment bank. Now there, for all practical purposes, it's as good as, the bank can't operate anymore until the restrictions are lifted, and there's no clarity on when that will be. So first, RBI said stop onboarding any new customers. Second, it has said that this action has been taken because of persistent non-compliance, and there were significant material supervisory concerns that it observed in the bank. So what it has said is that in the payment bank, there can be no credit transactions, there can be no deposits. Because the payment bank also has a wallet license, customers cannot top up their wallet balances after the end of February, that is February 29th. But if you already have balances in your wallet, you can continue to use it, you can utilize it. There'll be no restrictions whatsoever. Apart from that, in no mincing words, RBI said no banking services can be offered by Paytm Payment Bank other than withdrawal or utilization of the existing balances. The nodal accounts of 197 Communications, the parent entity, and Paytm Payment Services are also to be terminated by the end of Feb. Now, why this severe action, many people are asking, but do keep in mind that back in March of 2022, RBI had first taken, sort of a warning action against the payment bank for non-compliance when it came to IT, KYC processes, and so on. And it's been 22 months since then, and it seems that there's been no rectification of these deficiencies, which is why you've now seen the RBI ask the payment bank to stop onboarding customers. We spoke to our sources and we understand that about 3,000 to 4,000 crores is the total amount of deposits that the payment bank is holding. Remember, because it is a payment bank, it can't really lend. It only facilitates transactions. Paytm said that it expects an annual EBITDA impact of 300 to 500 crores because of these restrictions, but it is on a path to profitability. They said they're working with other banks here on and not Paytm Payment Bank for the payments business, because remember, the regulator also wants them to maintain this arm's length distance between Paytm and the payment bank. Bernstein now says that this effectively ends the operations for all practical purposes for the payment bank. It adds to the already heavy regulatory overhang. Macquarie says that the lapses are quite significant and therefore it'll hamper their ability to retain customers. The bigger issue is that they're not in the good books of RBI, and their relationships with other banks and NBFCs who they tie up to give loans may also get affected. And Jeffrey similarly says that the direct impact of this move could be 20 to 30% of EBITDA, and the reputational impact about 20 to 25%.
They've cut their estimates by about 45% on the EPS, Ritu, a spate of downgrades coming in. So thanks a lot for putting that into perspective. Paytm will, of course, be one of the stocks on our radar today. But that's not the only stock. A bunch of other stocks also in the news, for which Sonal joins us. Sonal.
Good morning. Earnings, they continue to come in, and we do have a couple of stocks which will be on our radar. Shree Cement, for starters, it was a good margin performance, while revenues were in line with estimates, and good margin performance came in on the back of lower costs. So EBITDA was at 1,234 crore rupees, margins higher at 25.2%, and net profit came in higher at 734 crore rupees. And volumes, they were largely in line with estimates. They were higher by 11% on a YY basis. Let's talk about Dixon Tech now, because margins were absolutely in line with CNBC TV 18 poll at 3.8%, and net profit mildly lower or largely in line at 97 crore rupees. Indus Towers will also be in focus, because sources have suggested to CNBC Awaaz that KKR and CPP, they are likely to sell shares in Indus Towers via a block deal, and they will be selling around 3,800 crore worth of shares in this particular block deal, which will be offered at 8% discount to yesterday's market price. We have JSPL, which was a good set. It was a margin beat. We had 24.3% margins versus a poll of 19%, and profits also came in at 1927 crore rupees versus a poll of 945 crore rupees. Lastly, looking at Godrej Consumer Products, good numbers, revenue growth of 1.7%, gross margins were higher by 400 basis points, and profits also higher by 6.5%. So it was a good operational beat on Godrej Consumer. All these stocks on our radar today.
Okay, all right. Well, thanks a lot for that, Sonal, for joining in and giving us all those stocks that we'll be tracking as well. But before we wind up, Mangalam, what's on your wish list?
My wish list, personal wish list will obviously be lower taxes, but from a country standpoint, more money in the hands of people so that we can revive consumption. That's from the FMCG standpoint, and you would obviously expect some more softs for infra so that more cement and metal stocks are, have a better demand.
Well, indeed, they've done very, very well on that infra and capex push.
Exactly.
And you'll expect that to continue and, draw a fine line between providing something for the rural economy and also keeping this infra boost going, because it's election year. So that's the only problem. I think from here on, things will just look up.
And what you and I say is not very different from a lot of people who wrote into the CNBC TV 18 budget ballot box. We actually compiled all of that and have given to the finance minister. If not this interim budget, of course, we will hear from, the team before the big budget that happens in July itself.
Okay, well, on that note, though, we'll wrap up on this edition of Budget Breakfast. It's goodbye from Mangalam and myself, but we will keep coming back to you all through the day for more budget action. You stay tuned. More coming up on the other side.